Traders, how you doing? Rick here with Hit and Run Candlesticks. It is Tuesday evening here, 4:30 my time, be 5:30 East Coast time, Tuesday, March 2nd, 2021. And I've gone through a few charts. I've done a little bit of charting work here, and I've got a couple that I want to share, a few that I'm adding to our watch list. Also want to go over a couple that we bought today to the short side. So we'll get to those. First thing I want to do is look at the SPY here. And, I don't think there's any question that most traders would agree that we've been in a real choppy zone here. And I want to share with everyone watching this video that chop is probably the hardest thing in the world to trade. It really is. Swing traders, that's what I'm talking about. I'm a swing trader. Swing traders love to have direction. And the direction can either be bullish or the direction can be bearish. But swing traders just do not like this chop. It is truly tough to trade. So, I wouldn't hang your trading experience on this last week of trading at all. You can see that it's gone nowhere. Now, there's no doubt there's been some money made, and I'm pretty sure that there's people out there that has just hit some home runs. I'm talking about overall the majority of traders. Yeah, you might, and you might even win 1, 2, 3. But what happens in chop like this, you end up giving some back, and it could be just a scratch game at the end of the week or even end of the month if it goes on for that long. The main thing is that you at least scratch at best. I mean, you don't want to go out there losing money. And if you find yourself really having a tough time trading right now, take a look at this market. This is a very choppy market. So I just want to shout out with that. Sometimes I think people, traders, they get bummed out with their trading for the wrong reasons. And sometimes we just need to step back and maybe just don't trade for the day or the week maybe until the market squares itself away. So anyway, with that, let's talk about this a little bit. I want to look at the 3-bar chart here. Let's get rid of all that. Here's a 3-bar chart on the SPY. And you can see we've had a nice little gap up here. And then yesterday, overall, it was a pretty decent day. I think we want to keep in mind that trend line here, we ran right into that trend line. I'm just laying this right here on this candle and then coming over to these candles. And we ran right into it. And then today, we came down with a bearish candle, gave us a shooting star. We tried to pull it up. The bulls tried to pull it up with a bullish Romy and ended up just failing on the last candle of the day. Again, this is a 3-bar chart or 130-minute chart. What we have here is an Oreo cookie. This is what we call an Oreo cookie. And, just, well, like an Oreo cookie, you've got the outside and you've got the inside filling and then the outside again. The problem is that's a bit of a bearish chart pattern. You add that to the fact we're hitting this trend up here, and you add to the fact we've got a blue ice failure setting up. Well, it's just not sounding too good, is it? So we want to be a little bit careful. Now, we could come down and just simply test these lows. That could be all it is, which, excuse me, I think for a lot of accounts, you're not going to like that. But, the world's not coming to an end there. So we just need to be very, very careful. For whatever it's worth, I did grab some SPY puts today. Let's go back to the daily here. I did pick up some SPY puts today because we closed underneath the T line. And, well, here I probably should go back to this. And we may want to run down and test into this area. So let's just put a line right there. That gets us almost to that 50-period moving average. So if it does fail down into there, then, well, we'll pick up a few dollars right in here. Hey, before I go any further, excuse me, first thing I want to do is say thank you to everybody that participated in our open house the past 2 days. Congratulations to all those that won the Amazon gift cards. Thank you very much. Thank you to all the members of Hit Run Candlesticks and Right Way Options for allowing Doug and I to open the room up to the public. So thumbs up. Thank you so very much from the bottom of our hearts. In the trading room, I gave away a couple of ebooks. Just in case somebody missed them, I am going to put them in the chat below. One of the ebooks was on the blue ice failure, and we have a lot of blue ice failures setting up right now. So that might be a great ebook to go grab. Just look down in the chat down there, click to learn more. It opens up the chat and you'll see the blue ice failure ebook in there. But we'll put that out there. Hope you enjoy it. All right, let's take a look at some charts here. The first one I'm going to start with is the Qs. And the reason I'm going to start with the Qs is I also bought some spike puts on the Qs here. We've got a blue ice failure. I'm not going to go into great detail because the ebook will explain it. Up, we come back, we basically fail the 50 here, we come back and fail the 50 again. And if you take a look at this, all we have here is a high and a lower high, a nice trend. And we're using the 50 period moving average as that pivot area. So we want to see price come down, come up, pivot in here, and start back down. And there's more of this information in the ebook that we'll have at the lower bottom of this video, okay? So anyway, the Qs closed with a bearish engulf, so I'm looking for that to move a little bit lower. Now, you know, the big $64,000 question is, are we going to break through 310.80 here? I can't predict whether we are or we're not. I'm going to go with the whole, let's follow the trend. That's what I'm going to do here. Just simply follow that trend. And as long as we keep getting bearish signals to the downside and we don't get a group of buying signals pushing us back up, I think I'm going to work with those Qs there and, well, we'll look at making some money with that one. So I think that's a pretty nice chart. Another one that may be set up for a short is another blue ice failure. In fact, that's all we're looking at tonight is the blue ice failures here, okay? So SPWR, you can see that that's been in a downtrend here. You can see that we actually created a high, a low, a high, lower high, a lower low, breaking down through the 50 period moving average, and then we rally up here to the 50 period moving average, and that's our pivot area. And you can see it might be starting to pivot back down to the downside, giving us right here a possible dreaded H pattern. Let me draw that out for you. Here we go. So something like that. That would be the dreaded H pattern. Another chart that I think is worthy for the watch list is TER, another blue ice failure. Now, let's come over here because just because you have a blue ice failure or a bullish engulf or bearish engulf or inverted head and shoulders or head and shoulders, just because you have those chart patterns, it doesn't mean that you're going to get performance from those chart patterns. I mean, let's take a look at this. We failed up here with a bearish engulf. We came down. We certainly broke the 50 period moving average. So as price came up, I mean, I see some possible signs of shorting here. And then all of a sudden it pops right up and we get bullish again. So it never gave the sell signal. Well, I shouldn't say that. You know, I can see this as being a failure of the 50, that pivot point. So if this trade was taken here to the downside, you'd have to have your stop. You'd have been stopped out. But the point I'm trying to make is just because you have a particular chart pattern, it doesn't mean that performance is going to take hold, okay? So it's important to use your stop. And sometimes a chart fights back no matter what. Sometimes a chart is tough. They just will not let go. And in this case, it didn't let go. It rallied up, ended up, pretty much a failure up here. And now you can see how it's moving to the downside. We've got a high, a low, a lower high, a lower low. We have a lower high, and then we try for a double bottom here, which that could have set this off to the bullish side. In fact, we had a nice gap up, but we ended up failing. So in this particular case, the pivot point was up here around this 134 area. I want to share with everybody that the blue ice failure doesn't mean that and that's the 50 period moving average here. It doesn't mean that the 50 period moving average, the exact price, is magic. What we're looking at is an area. In everything I do, it's an area, not some exotic price, okay? Look for that price action. This one did climb up. We did fail. And now it's starting to look like it just might start to produce and put some performance to that downside. So we're going to be watching that one. RAD is another one. Look at RAD here. Look how we've moved down, and then we popped below the 50. We actually came back up, a little gasp for air here, and then broke back down through the 50 with a bearish engulf. There's that Oreo cookie chart pattern again. The Oreo hard, chocolate outside, that creamy vanilla inside, chocolate on the outside again. And that is a really good pattern when you use that in conjunction with, the 3-bar candle pattern is a good pattern when you use it in conjunction with another pattern or in conjunction with support, things like, or resistance in this case, things like that. So we're looking for that to happen and move to the downside. Another chart is Roku here. I'm going to go to a different chart. Let's go to this chart here. When I'm looking at the blue ice failure, one of the things I'm looking for is the direction is toward the 200 period moving average. And that is right here. That's what that red line is. This dotted line, this is what we call the dotted deuce. This is the 200 period moving average, but it's front weighted, and it's the average of the lows. And that becomes a very good target area. And then when we fail that, we'll be looking at the 200. So when I look at a chart here, I like to have, coming from the top anyway, I like to have a good percentage down to those moving averages. And it doesn't, this doesn't mean we're going to get all the way down there, but I want a good percentage down there. And take Roku here, that's 28% down to the dotted deuce. So you got to know it's going to bounce up before it gets all the way there. And if we fail, then we're going to look at that 200 period moving average right there. And that, goodness, that's 41% away. This is the kind of things that dreams are made of if it actually gets all the way down there. The chart pattern is setting up that way. We've got a nice little top right here. We've got a gap down. The bulls trying to fight back with no success. And now we're back below the 50 period moving average with a bearish engulf. So not looking too good here for Roku. Well, that was the end of the trade ideas. We're just going to add a few to the watch list. We're going to start sharpening the pencil for some shorts. And I've got some long positions. If they start to turn around, I will be getting out of them pretty quick tomorrow. And we may even get into more of these short trades. All right, everyone. Thank you very much. Have a wonderful, wonderful evening. Check below for those ebooks. I'll get them out there for you. You guys have a great evening, okay? We'll see you tomorrow in the trading room. Thank you very much.